I did promise that we will definitely spice up things. We're not going to talk about policies, challenges. We're going to talk about what we've achieved, where we are, and I'm really honored to have a panel today of 4 clients that we could say we walked the journey with. So for us, it's about energy access. It's about what can we achieve and how do we take it to the next level. I think when you talk about energy and power, it's been a long journey. Some of these things take time. It's not that simple, and you need to be, you need to persevere, and you need to have partners. So we're going to split the conversation a bit in two. I got two investors, how capital is actually flowing into the sector, and then 2 clients where we really talk about innovation. How did we innovate not only in South Africa, but also in Zambia? So I want to start with Fred. Fred came all the way from Denmark. When I called him and asked him to join us today, he was eager to support us in this event. And specifically, when you talk about CIP and what they've done on the continent. So CIP has invested in Malilo, one of our local project developers and IPP, and I think it was quoted that it was one of the most significant and biggest investments in the last 5 years in the private sector in South Africa. So I think, Fred, if I can turn to you, first of all, why South Africa, and what was your experience to date?
I think it's important to start by saying that outside of my office, I look over the pier of Copenhagen. There's about 10 centimeters of ice on the harbor right now. So when you asked if I would come and join you here, it's an easy answer. Weather is significantly better in South Africa. No, we started looking at SA in 2021. Ultimately found an investment we're excited about in 22, and we're able to conclude that with Comcom approval in early 23. And I'm incredibly excited about what we've been able to do. The environment we looked at back then was fairly challenging. You had significant need for new generation capacity, load shedding on a daily basis. You had a hunger for new electrons coming onto the grid. So while challenging, we felt that we could actually make an impact on the ground. And through the investment we've been able to make in Mulilo, we are currently on track to deploy 100 billion rand worth of investments in South Africa in solar, wind, and battery storage projects across more or less all nine provinces. And that has been a significant success for us, gone better than we had hoped. And I think this is in part due to the fantastically talented people we've been able to bring on board on our teams down here. So it was a challenge to get it through the investment committee. You get the inevitable questions of why Africa? Why don't we go somewhere else? Why is this important? We have a global scope. We don't have a specific mandate for Africa. But because of the core demand, because of the sort of indisputable need for the renewable energy, we got comfortable quite quickly that this would be a great destination for us to be, and we've not been sad. We're quite excited still.
Thanks, Fred. And we appreciate you coming to sunny South Africa, especially in Cape Town with the wonderful weather. I want to follow on that. I mean, your appetite for South Africa and your experience to date. I mean, what is if you put one burning question out there in terms of a concern going forward to deploy more capital? And I think you've mentioned your pipeline. And I think if many of you don't know, I think we've got 15 projects that is in the pipeline for the next 24 months to reach financial close, which is quite significant. So just the key thing that you will look out for to do more in South Africa.
So I think at its peak, we're likely to be constructing north of 20 projects at the same time. That's not easy, but we have really good partners, and that helps us a lot. What are key concerns for us in finding new investments? It's finding investments that fit our profile without conflicting with the current investments that we have. We need to find things that are minimum 2 billion in equity ticket rand. So that's a bit of a challenge for us. if I may say, there are a few macro things that are also teasing us a little bit. It's incredibly difficult for us to take some of our team members from our head office down to South Africa. So your visa rules are actually quite limiting and makes it difficult for us to actually have the proper stewardship over the investments that we would like to make down here in South Africa. I think that's a silly restriction to have, and one that I wish we would overcome. But nonetheless, something that is a topic in our investment committee. A second challenge that we're faced with is your new property laws that allows for, in extreme cases, to take property without compensation. I can understand that there's a historic background to this, and I can understand that there might be a lot of rationale. But as a foreign investor coming in here, hearing that property can be taken without just compensation, it's a very scary thing for us. And while it may make sense in the context of the current government, one could fear that we would see a less judicious government in the future that might abuse those types of rules and laws. So that's a point of observation. And the last thing, if I were to mention something, it's a topic that we've heard many a times in South Africa. It's the construction mafia. This year we end up being in construction of 20 plus assets. Some of them in benign and very calm jurisdictions that are extremely friendly to us. But there are also some jurisdictions that, rightfully so, are very challenging. And it's not going to be helpful for further investments in the country if I have to explain to my investment committee that people with AK-47s rocked up to our sites and threatened our staff. So serious steps taken by government to address construction mafia is something that we actually would welcome and think would be a nice improvement onto how we deploy assets in this country.
Thanks, Fred. And just on that, maybe many of you may not know, but you know there's currently to the tune of 300 billion rand being invested in the sector in South Africa. And I think we don't see that scaling down soon. We still see a lot of momentum in terms of what we do, what's coming our end. And I want to just quickly shift to Africa. I mean, Chris, when we look outside of South Africa, sometimes we're being told, as a bank, you're not proactive enough, it's too difficult. I mean, we've closed last year 8 transactions and supported clients outside of South Africa, and it was far more difficult than being the go-to bank and doing things the way we do it in South Africa, because it's regulatory environment, there's still open access need to be adopted. But what we've seen is that capital providers are critical in terms of unlocking some of the opportunities and take a different view in terms of investment. You've been involved in many of these countries, looking at it from a fund perspective. How do you see that environment expanding? There was some mention earlier this morning through IFC referencing Safiri. I mean, that's things that you are involved. Maybe you can share some light on that as well.
Sure. So we have been at it since 2006, the early days, being a first mover on the continent. And we being Inspired Evolution, that's a company, I'm the managing partner in Inspired Evolution, together with my partner Wayne out of London. And we've been on the continent with 5 offices since then, sort of slowly evolving our suite of evolution funds. Our first fund was $100 million starting in 2007, very nascent markets. In fact, at those days, there were no commercially operating reference projects with renewable energy. The markets have really shifted dramatically, particularly in the last 5 years. So it's about selecting those tier 1 countries where you have the right enabling conditions for a deal signature that's investment grade, and then slowly building from that. But it requires an enormous amount of rigor and determination. I mean, there's no substitute for grit. But we've seen a situation since the sort of early days where South Africa was the dominant market, where we invested most of our first fund assets, shift completely around to where 75% of our deal flow is now outside of South Africa and even the common monetary area. And that's just based on low carbon integrated energy policies of progressive governments, as they've caught up It's still challenging in many frontier countries, so a detailed country categorization is really key. But that's, our part of our differentiation is to make and move those markets. And we've got a group of investors that have been very loyal since the get-go. And we've managed to make reasonably robust returns that have allowed us to grow our funds under management. So it's really about moving steadily into the new opportunity set, making sure that you have an enormous amount of rigor and you pay particular attention to the investment grade.
And just as a follow-on, the previous panel discussed a lot about programmatic scale. I mean, how important is that in terms of your business model and how to address market gaps?
Scale is very important, particularly when it comes to new initiatives like Project Zafiri, which we are one is it's a managed account. So this is the $1 billion energy access World Bank Mission 300 initiative that we are the fund manager for, and that's about to close imminently. First phase of $300 million, and then it's a permanent capital vehicle. So those sorts of initiatives are fundamental to get scale. I mean, it would be a travesty if we couldn't get beyond phase one. It has a certain very ambitious target to try and connect 6 million within the first 5 years, but then make a significant difference to the 300 million Africans that don't have residential connections at this point in time. So the ability to scale is really driven by a complex set of how do you create a platform that can crowd in commercial investors using first loss or junior equity in combination with technical facilities that we also manage in a sidecar to make it all work. And that's really the kind of alchemy that's necessary. We've done it before, and I think increasingly blended finance structures like that are no longer just an innovation, but they're going to become the norm for how we de-risk an inflow of equity into the continent. So scale is critical, but the issue we've got is that a lot of the bankers and a lot of the funders are still sort of sitting on the sidelines, waiting for kind of what they're used to, like what they're familiar with. This is unfamiliar territory, but it's increasingly on a convergent path between the sort of strategic investment and moral imperatives. And that's because of a whole bunch of factors, including price changes and transaction readiness.
Good point. We'll get back to that and your challenge to the banks. I'm definitely keen to take it up. I want to move from capital a bit to innovation, and I want to just bring you back to what we see, what's happening currently in a market like South Africa, and also move then into a follow-on to a country like Zambia. But I want to start with South Africa. What we've seen here is a deliberate effort by our government to transform the power sector and open up markets, specifically around allowing third-party access, transformation of the sector in terms of allowing traders, aggregators, and how we actually support corporates in terms of energy access. And I think one of the ideas or one of the initiatives that we've seen a number of years ago was this emergence of traders and aggregators in a transformed environment with legislation changing. One of the successful companies that you may have seen over the media and a number of projects that we've closed with them is Noah. And I got Carl here today to just start by sharing the Noah story. I know when I give you the floor, you can probably carry on for the last 22 minutes that we have, but just in a nutshell and where you are and what next. So thanks, Carl.
Thank you, Rensha, and thank you, Standard Bank, for the opportunity. And maybe just let me start with clarification. This Noah should not be confused with the guest speaker of last night. This Noah was derived for the ambition of a net zero Africa. And I've heard about long journeys. I think we have people that have been in the industry for many, many years. I think our story has actually been a bit of a sprint. So maybe just by framework, what is an aggregator or a trader? The business model that Noah follows is what I would describe a vertically integrated utility or platform model. So on the one hand side of the platform, we are building assets, so solar farm, wind farms, battery farms. and then we put all the electrons in a pot, and then we distribute it to multiple off-takers on the other side. And in our world, the off-takers are private off-takers. So that's sort of the business model in a nutshell. I have heard a lot about pipeline developments today. I think as a trader, we tend to flip things around. So for us, the pipeline is we start with the customer in mind. So we try and identify energy users that are ready to go on an energy transitioning journey. As a NOAA team, we found those customers in more of the large energy consumers in the country, being the mines, the smelters, the data centers, the larger industrial sector. And by understanding their needs, we then manage to back engineer to try and figure out what type of energy assets will be required in order to produce the energy profiles that these customers need. And it has been a bit of a sprint. As Renshaw said, we have been very fortunate. Over the last 18 months, we have closed just short of 1,000 megawatts of projects, deployed or committed about $1.5 billion to the platform, and there's no end in terms of the demand that we are seeing in the market. So the next 12 months will probably most likely be an acceleration. And I think an acceleration for any entrepreneur that builds a business is exciting. I think some of the challenges that one runs into when businesses scale in general, but I think specifically when they scale fast, is that what you've done last year is no longer relevant this year, and what you are doing now is definitely not going to be relevant 2 years from now. So maybe to talk or to give one example of innovation, I always say to get utility type business models right, it's a little bit like a triangle that you have to continue to balance. So in our world, you have to have a customer, you have to have electron, and you have to have a dollar. If you don't have those three things in balance, you can't get the ecosystem to move. But if you get the first two of those in place, very quickly the dollars start adding up significantly. So in our journey over the last 3 years, we had to recreate our capital structure 4 times. Very first business model, we said, we're going to build with equity. It's much easier to build and refinance later. Until the first time that you rock up to an investment committee with a 200 megawatt facility and people say, no, go back to the drawing board. Project finance is the way to go. So it was project finance, and with the support of Standard Bank, figured out a way to get an aggregator and a trader model bankable in the South African environment. In order to get an entity that doesn't exist suddenly bankable in a project finance world required significant guarantees that we with equity had to fund initially. And again, we ran out of capital. So with the support of Standard Bank, developed a guarantee facility to allow equity to scale faster. And I think where we are today, project finance is working well, but I think that we are beginning to see a world where project finance is probably not going to be the vehicles that is going to take this type of business model through the next 5 years. So we're beginning to ask the questions around what does capital scaling look like in a world where the traditional models is probably going to run into its limits.
Yeah, I think that comes back to the challenge to the bank. How can we add that value? How can we step up and differentiate ourselves? I think the value proposition is along different products. I mean, for us to be able to be relevant and leading that at all times, I think I want to move to Zambia. Now, 3 years ago, I took our credit team with me to Zambia, and I said, we need to be bold here. We need to be able to step out of our comfort zone, because this is important for us as a bank to step up. And the real reason is not only the minerals and the opportunities around Zambia, but actually the linkages into its neighbors, and specifically DRC. Greenco has been a client of ours, and we've been in discussion for many years around the model, what can work and can't work. And I think because of the emergency situation in Zambia, we had the opportunity to really brainstorm with Greenco. And I think, Wesi, you've been at the heart of it in Zambia dealing with some of these complexities and challenges. And I think maybe, you know, not only to go through the Greenco story, but also the business proposition and how you work with your partners, being your clients like mining companies to solution for them.
Well, thanks, Rensha. And you know, as you rightly say, as you look at a market, especially you know an African bank, a Pan-African bank, you need to look at the entire value chain, you know, of the economies that you are supporting and the you know individual you know enterprises and businesses there. And when you support mining in Zambia, you need to make sure that you've got a robust you know service delivery to those mines, and you de-risk you know their operations. Greenco, you know, has been you know a journey, I think, of almost you know 8 years now, if not longer. And you know when we started out as a trader and aggregator in the market, long before you know you had you know any idea of where your first transaction is going to come from, what it's going to look like. You're on a journey really of engaging you know your national stakeholders, your utility, your regulator, you know, to buy into you know the you know what you see as a you know a changing industry landscape, and really coming from a background where you know you had your you know your default single buyer model in a lot of these markets that you know had served you know its purpose you know for a while, but that model had reached its ceiling and could no longer deliver what the market was you know was demanding. And so we came in with you know on the premise of you know reallocating risk in the electricity market, you know purely among private players, and we see the SAP market you know as the de-risking market or the de-risking vehicle for you know for projects to bring on new generation in the region. That's how Greenco's model is set up, is to really look at that regional market. It's a huge opportunity and there's huge potential to drive the markets forward. And this is our philosophy, this is our belief. And so indeed, coming to you know transactions that we did, I mean we did our first transaction you know towards the end of 2024 with a crisis that happened. You know, I think the worst crisis from a Zambian perspective in living memory. And our hydro generation all of a sudden was crippled. I think we had just done you know 750 megawatts at Kafue Gorge Lower. I think everyone thought you know this is really what you know we need. But there we were with you know 80-90% of our generation exposed to hydrology and hydro risk. So on came the drought, and we were generating you know 30%, 40% of you know of what our installed capacity was. And really you know what we saw then was quickly as a trader and aggregator, we needed to have not just trading innovation, but also the financial engineering you know innovation. And I think having a partner like Standard, who had understood the Greenco story from before, was not learning it then, because you know you took the interest, you took the time to learn it, and understanding what the SAP market represented, meant that we could go from inception to structuring what effectively was you know akin to a commodity finance or trade finance type structure, but I think with very you know interesting nuances. We went from initial engagement to closing out a transaction with you know special purpose vehicles built in there to facilitate it within 3 months, and close a $55 billion you know transaction, literally from cold start to finish, to import power from the region. But also importantly was not just importation of power, but it integrated the national utility ZESCO in such a way that we catered not just to supply to new customers when we started building out our portfolio, but to a structure that also provided a runway for the utility to have some breathing space to recover. And so you took a position on the ability of the utility to perform its obligations under the structure, utilizing the precious little hydro that we had to make the supply work over a 24-month period. And B, because our commitments under that structure to deliver power to customers involved significant exposure to the markets, i.e. trading on the competitive markets, for complementary power that we had committed. You also took a position on that, and I think the future of financing transactions in the region, whether that's on the SAP or you move to the SAWEM coming in South Africa, is going to be market-based. And I think the financial institutions that quickly, shift their kind of like approach, traditional approach to a market-based approach, I think are going to, lead the pack in terms of capitalizing on the opportunities that are coming. We did a second transaction last year on a 100 megawatt project, one of the largest projects outside South Africa. And again, there first a turnaround, and I think the belief also then in the underlying, off-takers that underpin the transaction. But again, it's also great from the perspective that the ability to take a solar profile and deliver a 24-hour baseload profile is underpinned by structures that integrate the utility, into that transaction. But finally, it also then foreshadows and introduces structures that already give a practical working example of what a full-on open access regime and framework would look like. You're talking about core supply, you're talking about generation profile transformation, etc., etc. So these are all very great, and I think begin to make for an easier transition because you've got working, practical executions of projects that deliver what a wider transformed sector is going to look like.
Wesley, I'll come back to you. I've got 9 minutes left and I'm cautious of time. I've got so many more questions. I just want to, Fred, back to Malilo business model growth, what we just discussed. The importance of continued growth with regard to transmission limitations. Just how important is that in growing a business with a pipeline that you're developing and finding solutions around not only the TDP, but ensuring that the ITPs are rolled out the way we see that? Just some thoughts around that.
It's obviously incredibly important for South Africa as a country that we keep seeing generation coming online for many years to come. A lot of power will be needed. A lot of power is predicted to be needed. And the transmission lines are getting increasingly constrained. And I would expect most grid capacity will run out in the next 1 or 2 years. So this is of paramount importance. Now, let's take it from my own little self-interest perspective. I'm investing in Mulilo with the perspective of fixing the team, growing the business, growing the assets under management, and then ultimately selling that business. I am selling a growth story. I'm selling a story of a business that's gone from being fairly small to now predictably cranking out about 1 gigawatt or more of renewable energy capacity per year. Not an easy feat, I might add. If the sentiment in the market is that that's great that you have the engine, it's great that you have the capability, but there's no capacity on the grid, the value of that investment decreases dramatically. So from my own self-interest perspective, I certainly would want to see this succeed. I think it's important for South Africa, and I think it's fair to say that we need around, on a high voltage side, 14,200 kilometers of line to be built. Eskom reasonably, on average, builds 300 to 400 kilometers a year. This 14,000 kilometers that needs to come online in the next 8 years. We are far, far behind. Now, the new program from the Minister Ramokgopa is exciting and it's important, but it's also in its infancy. We need to see it be realized, and I think there are still some challenges to be figured out. We would have liked to participate in it because we're good at deploying things fast. But the way the rules were written, unfortunately, didn't permit private equity funds like ours to participate. So hopefully we can participate in the future. But But to say that this is important is a bit of an understatement. It is absolutely fundamental for the entire industry. It is also fundamental for growing out manufacturing capacity in South Africa and for continuing to deliver to a larger and larger middle class that needs to have cooling in their homes and needs to be able to put the lights on whenever it's needed. So I think we can all agree that the need is there. Now the question is, how do we work together, private sector and Eskom, to make this happen? And I think that's where we're seeing some challenges right now. Eskom is in the fight for their lives. And it is a challenging position to be in if you're them. I would love for Eskom to see themselves as stepping up and becoming the TSO that South Africa really needs. I think Eskom as a generator of power is going to be true for years to come, but less and less so as we see private capital come in and provide the funding that is needed for affordable and clean energy to come online. However, Eskom needs to drive the bus when it comes to transmission and focus on seeing that deployed as fast as possible. And now that we've seen generation stations largely being fixed, and Dan, the CEO of Eskom, have done an incredible job of stabilizing the business. Now we'd love to see NTCSA become fully unbundled. We need the independence in the TSO. That's extremely important. The transmission service operator needs to be independent of the interests of other parts of Eskom that might have very differing views on what should happen. And then adequate resources need to be put through to the NTCSA, both from the South African government, but also from the international community to help make this a reality. So that's my hope, and I'm concerned about this. It keeps me up at night, and I think we haven't seen the last of this topic. The president was extremely clear at the SONA address. It will be an independent TSO. It will own the assets, but one shouldn't underestimate a national utility that has its business model fundamentally challenged by a changing industry and what they're willing to do to defend that. And I think we need to be cognizant of that, and we need to define a way forward for Eskom that respects not only their history, but also the many people that work there.
Thanks, Fred. Certainly more to unpack there, but just moving quickly to you, Carel. What we've seen is that regional connectivity, integration are becoming more and more important, especially in the markets we operate in. It's not only about South Africa generating for itself, but it's becoming more a regional integration model. How do you see the NOA model expanding beyond just the South African market solution?
Yeah, I think, Rensha, you're right. There are significant demand centers being developed north of the South African border. I think we've spoken about in Zambia and the DRC some significant mineral opportunities, and where I think a lot of energy will be required to be delivered. So I think as a NOA team, we're trying to answer questions around, do one follow with generation to where the demand centers are, or do you help to try and increase the interconnectivity between the various countries? And the wisdom probably lies somewhere in between. I think for now, provided that the legislation gets put in place, we would love to contribute to the Southern Africa Power Pool from an already well-established generation base. And I think technologies like storage, as an example, I think will help us significantly to unlock the wire infrastructure that exists already. So I think that might be an answer for South Africa, but also I think for the African continent.
Thanks. I got many more questions, but I want to quickly shift to you, Chris. You got investors looking at opportunities. They look at Africa and they say, "There's risk, but we want to go there." How do you balance, return versus risk in terms of your LP requirements and opportunities that may take long? How do you see that play out?
Well, I think I touched it on in my initial comments. Is it's through carefully crafting blended capital structures that allow those investors who are prepared to take a lower return to move nascent markets in higher risk countries to crowd in other commercial investors on top. And that's effectively what we're doing on a very big, broad programmatic basis. So, they are progressive investors that have bought into the moral imperative because, we're talking about grid and sophisticated South Africa and all those other things. But the elephant in the room is more than 600 million Africans who have no access to electricity. I mean, it's a travesty. With over 100 years of having electricity on the continent, we haven't solved that problem. So I think they have a very purpose-driven intention to fund that, but in a cautious way that we can structure, and then build scale through also country compacts. The importance of those multilateral organizations and the African Development Bank and others of crafting country compacts that can resolve headwinds and regulatory issues that we have with distributed renewable energy. I mean, we're talking last mile here on the energy access side. We've done all of our large grid connected stuff. This is the other side of the equation. And that requires a lot of complex moving parts. But so you've got to build a sophisticated model that can actually solve for all of those moving parts. And I think it's a group of progressive investors combined increasingly with global philanthropic organizations and then incoming commercial investors on the top.
And I think you challenge the banks. We take that challenge on. Just the last question. I see my time is up to Wezi. Wezi, the Zambia model, you've got offices now in DRC opening up in Zim, as well as Namibia and South Africa. I mean, how do you see your investor base and your partners accepting that and being part of your growth story? Or do you still see this as mainly focusing on what you've achieved in Zambia, and how do you see the next phase?
Well, Rensha, I think when it comes to infrastructure investment, be it roads, rail, and electricity is no exception, I think we would do ourselves a great disservice if we continue and perpetuate a nationalistic view. And especially when it comes to downstream infrastructure investment, transmission, and related assets. When we take on a regional perspective, and when it comes particularly to integrating renewables in our grids, if we approach that in a smart way with a regional perspective and making those projects bankable, they work when you have regional trade, and then you also attract private financing into those. So it's a very deliberate strategic step on our part to view electricity and supply security. In fact, the very mandate that, at the turn of the century that the SAPO set up for to ensure or enhance energy security in the region. From a private perspective, we reinforce that and see that as a regional initiative. When we can build interconnectors that facilitate trade, it stimulates backward infrastructure investment within our national borders. Secondly, when that trade, or to trade effectively, or to even to pursue certain projects in the region that are large, some countries have potential for generation capacity that the market simply cannot absorb. Those projects need an outlet and exposure to the entire region. You need to make that trade as frictionless as possible through reliable infrastructure and reliably managed and predictably managed markets. So the regional perspective is an imperative. In fact, I think the SAP and other bodies have conducted studies that show the region saves in the order of tens of billions by taking on a regional perspective in pursuing these infrastructure developments than a national one. So for us, being able to enable and facilitate that trade, both between ourselves and third parties and between sister companies within region through bilateral structures, is absolutely what the region needs, and is absolutely, we believe, the sustainable way forward. And we are supported by institutional investors that actually have have been the region's supporting and cooperating partners. DFIs like Infraco, the Danish government through the IFDK, the European Union. And so linking the investment dots for us is, exactly the same as linking actually the infrastructure and physical trading dots in the region to make that viable. So it is, I think we think, will be proven, in the long run, the regional perspective and the ability to interconnect risk and opportunity across borders is what's going to be, the long-term, solution to our delivery.
Thanks. My time is up, but I'm going to summarize in a nutshell. I think you've heard it from the investors, you've heard it from the innovators, the solution providers, not only here, but also across the border, and how we need to collaborate. For me, it's all about partnerships and to be able to deliver to our clients a solution across product, across region, with impact. So I thank all of you for joining. This was a graveyard session, but I hope we entertained you to a little bit. Thank you. Thanks to my panel.